Welcome back to the floor of the Senior Group here in Chicago. Wednesday, October 12th. I'm Killer. Thanks a lot to the Wolfman as well as Peter Yastro for filling in and helping me out here at the CMZ. Let's get into the zone, folks, the CMZ zone. So here we are today. We're enjoying this pop in this equity rally. You know, think about it. Last Tuesday, the S&P, yes, folks, last Tuesday, the S&P was trading 1068. It just touched 1209.75. Sensational rally here. And I was on CNBC Fast Money last night talking this with Karen and the rest of the folks who I value and respect each and every one of their opinions. However, I disagree with the fact that this is a move out of treasuries into equities. This is not a risk on. The volume has not confirmed the fact this is a risk on. And if we look the last couple months, since August, this is a trading range. This S&P, it's been pretty tight from 1135 to 1208. I just think we're at the high end of the trading range here. I don't mean to be a perma bear. I trade in an agnostic manner. However, I have not received any clarity. I've really been drilling down what's actually on the books. When you try to get a feel for the valuations of some of the derivatives, these complex derivatives that typically don't trade that much, this is the insurance that these banks have been buying, essentially a piece of the credit default swaps, that they are going to be okay. But you can't really value, and there's two actually standards out there that are valued. There's an international settlement standard that doesn't really size up to a trader's settlement standard. So trying to get our arms around that, but anything short of essentially a euro bond, you know, I'm not feeling that great about Europe because nothing has been resolved last week. And I think this is going to continue to see volatility, continue to see this trading range until that G20 meeting we get something more out of Europe, specifically out of Merkel. But we see the situation here, you know, we've been kind of put on pause. We haven't had some better data. Washington is still in the background. We have a lot of protests going on here. I don't think this market is healed yet. I want to be optimistic, but I don't think I can be optimistic about everything until Q1, Q2 in 2012. Right now we have a lot to work through. So we will see how this all pans out. We have FOMC minutes today. We have a 10-year auction, a 30-year auction tomorrow. I think this treasury market, though, is a buying opportunity here, folks. You know, we saw it test at 228, 230 yield a couple times. It's gone back down to under 2%. I foresee that happening again, but typically in a treasury auction week, you see that price relent and that yield go up. So hop in, grab a mid, get in the game, and get some treasuries, folks, because it has been proven to be profitable ever since April. That 10-year came all the way down from 3.75%. Be on CNBC tomorrow morning on the opening bell, bringing some killer insight from Melissa Lee and Jim Cramer. Hopefully you have the opportunity to tune in there as well. For the rest of the day, for the rest of the week, you have to remember, be the hammer, not the nail.